Hey everyone, welcome back to the channel. In this video, we will discuss about the important updates we have today in the live market regarding Vedanta stock and as well as the Indian economy. We have an important update regarding the Indian economy and its GDP growth. So we will discuss that in this video also. And we also have an important update regarding a stock which we will discuss in the video later part. So before going to that, let's check the market closings today. Nifty 50 gave a closing of 21,182 points. That is nearly 256 points has been gained up from the opening. That is 1.23% surge. And when coming to Bank Nifty gave a closing of 47,732 points. That is nearly 640 points up. That means 1.36% surge. So Nifty and Bank Nifty today made a all-time highs from the opening of the market as well. In the morning, the market showed a little bit bullishness and later on it continued for a sideways, but it closed in a positive note. So, well, we are diving deep into the details. Let's first discuss about the India's GDP and the regarding update from Asian Development Bank. The Asian Development Bank has just boosted its GDP growth forecast for India to 6.7% from 6.3%. That's right, a faster than expected expansion is on the horizon. So, what's driving this economic surge? Well, it turns out that the July September period saw double digit growth in the industry sector, propelling India's growth story. The ADB credits robust domestic demand as the key driver, not just for India, but also for our neighbor China. Speaking of China, their economy is set to expand by 5.2% this year, surpassing the previous forecast of 4.9%. Household consumption and public investment played a significant role, especially in the third quarter. It's a win win for both India and China on the growth front. Now, it's not all smooth sailing. The ADB chief economist Albert Park highlights that while developing Asia is growing robustly, there are still risks. These include global factors like elevated interest rates and climate events. Park emphasizes the need for vigilance to ensure resilient and sustainable growth in the region. This ADB upgrade follows closely on the heels of the Reserve Bank of India's optimistic outlook. Just days ago, the RBI's Monetary Policy Committee increased India's GDP growth estimate for the fiscal year 2024 to 7%, up from earlier 6.5%. This economic growth forecast for the upcoming quarters also received a boost. RBI Governor Shaktikanta sees India's economy as a beacon of resilience and momentum in the face of global economic uncertainties. He highlights the strong fundamentals, healthier balance sheets for banks and corporates, and the government's focus on the infrastructure spending. What's in the store for the future? Well, the RBI governor anticipates a positive outlook with support from rural demand, manufacturing activity, and services. However, he also cautions about global risks such as geopolitical turmoil and financial market volatility. Today we have an update regarding IRCTC as its shares hit a 52-week high at 800 rupees on the BSE. What's causing the excitement? IRCTC's ambitious plans to expand its non-railway catering business across India. In the market opening, IRCTC shares rose to 795 rupees, a 2.1% increase from the previous close at 778. As of 11:25, the maintained momentum at 791.65 rupees, marking a 1.75% rise. The company's market capitalization stood tall at 63,300 crore rupees, showcasing its impressive growth. So, what's the strategy behind this surge? IRCTC is actively engaging with various organizations and industrial houses to establish catering units outside the railway domain. The main objective is to solidify its position as a premier hospitality and catering brand nationwide. IRCTC has already linked MOUs with significant entities, including defense establishments like the Border Security Force, and has plans to commission 15 additional catering units. Now, let's talk the figures. In Q2 of this year, IRCTC witnessed a substantial 30% year on year growth in net profit, reaching 295 crores. The revenue from operations also saw a remarkable 23% year on year increase up to 995 crores. Notably, the catering segment alone experienced a robust 29% growth, reaching 431 crores. These numbers underscore IRCTC's successful diversification beyond its traditional railway services. Zooming out, CRISIL Ratings predicts a 12 to 14% growth in the tour and travel industry by financial year 25. IRCTC, with its strategic expansion plans, appears well poised to capitalize on this growth. In a short conclusion, IRCTC is evolving beyond just being a railway centric entity. It's carving a niche in national hospitality and catering, evident in its 52-week high, impressive financial performance, and ambitious future plans. Keep an eye on IRCTC. This journey is far from over, but don't take any investment decisions without consulting your financial advisor. Today we have got the latest scoop on Vedanta, and it's a bit of financial roller coaster. Vedanta Resources Ltd, the parent company of Vedanta, just snagged a cool $1.25 billion loan for some much needed Vedanta debt refinancing. Let's break down the story. So Vedanta is facing a bit of financial puzzle with a whooping $3.8 billion in bond repayments over the next 3 years. This includes a hefty $1 billion due in January 2024, followed by $0.95 billion in August 2024 and another $1.2 billion in March 2025. Now, the timing of this loan is crucial as it comes just in time for Vedanta to tackle that $1 billion debt maturing in 2024 January. Investors are watching closely to see how the company manages this financial tightrope. But wait, there's more, yes. Vedanta also announced that its board will meet on December 18 to consider and approve the second interim dividend on equity shares for the financial year 2023 and 24. This could be a silver lining for investors amid the financial challenges. Now let's talk stock market drama. Vedanta share stock took a hit, falling 1.7% to 248 rupees on BSE. This adds to Vedanta's wild ride in the market this year, from a 52-week high of 340 rupees in January to a low of 207.85 rupees in September. Credit rating agencies are all throwing a shade on Vedanta's financial health. CRISIL downgraded Vedanta's long-term rating, citing concerns about financial flexibility and delays in debt refinancing. S&P Global Ratings and Moody's Investor Services joined the party earlier in October, downgrading Vedanta Resources ratings. That's all we have regarding the Vedanta. So thanks for watching. If you really find this video helpful at any point of time, don't forget to like this video and also subscribe to our channel. Thank you.